Hello friends and welcome back. In this video, we will be doing the in-depth fundamental analysis of one of the leading FMCG company, Britannia Industries. So stay tuned throughout the video to understand about the Britannia Industries in detail. So before starting our video, let us quickly see what we have discussed in our earlier sessions. The first is that we discussed what is inflation, what are the ways we can beat inflation, why investing in stocks is the best option or the best way to beat inflation as a retailer, why is stock market considered risky, why investing in stocks on a longer horizon highly beneficial, how to choose a good stock through fundamental analysis and some financial terms. So you can find all these sessions in our playlist. And now let us see the fundamental analysis of the Britannia stock. So the first statement is it was listed in the year 5th November 1988. It has been 23 years after the Britannia Industries was listed in the stock market. So by this statement you can come to know that you're having a lot of data to understand about the Britannia company. 100 years of old experience in India. People believe in the brand of Britannia. It is a well-established company in India. And now let us see the overview about the brand and the products of Britannia. It is very important as an investor to first understand the business of the company. Warren Buffett once told, if you do not understand the business of the company, never ever invest in that company. We make a common mistake by investing in the companies that business we do not understand at all. We think that the companies which we do not understand will give us higher returns. So let us start with the overview about the brand and the products of Britannia. Good Day, Tiger, NutriChoice, Milk Bikis, Marigold, which are household names in India. Britannia's product portfolio includes biscuits, bread, cakes, rusk and dairy products including cheese, beverages, milk and yogurt. From this you can infer the fact that Britannia is having a diversified portfolio of products. So it is a very positive sign for an investor, because if the company is dependent upon one or two products, then it is having a high chance of falling down. Britannia Industries is having a market capital of 82,823 crores. As you know, market capital is nothing but current share price into the number of shares. The current share price is 3,440 rupees. The stock PE, that is price to earnings ratio, which we will be discussing in the further slides detailed, 44.4, and return on capital expenditure is 45.4% and return on equity is 46.9. Debt to equity is 0.59, which is just as negligible. And now let us see the price written portfolio of the Britannia company. In 7 days, it has given you a negative 0.45% of return, 14 days minus 2.25%, in 1 month minus 1.68%, but on a longer horizon, for 10 years, if you had invested in the company, then you would have got a return of 1648%. So if you had invested 1 rupee in the Britannia company 10 years ago, then the same amount would be 1648 rupees. So from this statement, you can infer the fact that the stock market is highly volatile and short-term investments would have made you in a loss, but long-term investments will surely give you wonderful returns. Now we will see the enterprise overview. One of the most trusted food brands and deeply penetrated brand in 90% households is the Britannia company. Successful brands include Marigold, Good Day and Tiger. Biscuits form 80% of the sales, bakery products form 18% and dairy forms 2%. Which means that Britannia is getting its major revenue from the biscuit sector. The business has 30% of the biscuits market share and a market leader in the bakery products. 30% of the biscuit market share belongs to the Britannia company, which means that in India, the total amount of biscuits, 30% belongs to the Britannia company. Emerging dairy business opportunity is a major advantage for the Britannia company. Rural contributes 37% of the sales, urban contributes 63% of the sales, which means that rural is having a high potential for Britannia to expand its business, and Britannia is doing its level best to expand its business in the rural sector also. The product portfolio is concentrated in the biscuit segment, Domestic contribution to revenue is 94% and exports contribute a low of 6%. And that was about the enterprise overview of Britannia company. Now let us analyze the strengths of Britannia. Britannia has been around 120 years in the industry, which is having a wonderful brand value, a strong brand value in the India and a well-established company in India. Britannia is one of the India's most trusted brand with a strong brand recall, wide range of bakery products, a wide diversified product portfolio, strong distribution network ensuring proper availability of products even in the remotest of areas. Britannia has a major share in the biscuits industry, around 30% share in the biscuits industry alone. Marketing and advertising efficiency, innovative products for health conscious people like oats, porridge, Britannia Nutri-Choice, biscuits for diabetic patients, Vitae Mary, etc. Strong presence in the rural market, products for all food and snack segments is a big boon for Britannia company. So these are some of the advantages or some of the strengths of Britannia company. It is also very important to see the companies operating in. First, we should analyze the company. We should understand the strengths of the company. Then we should see the industry the company is operating in. We should then go to the financial part of the company, and then we should see the scalability part of the company. Now we'll first analyze the industry the Britannia company is operating in. Domestic consumption contributes 60% of the GDP, expected to rise to 60 trillion by 2030. You should simply not read the statement. You should first analyze what is in the statement. From this statement, you can infer the fact that Britannia has not reached to its saturated level. It is having a high scope to expand its business. FMCG, that stands for fast moving consumable goods, is the fourth largest sector in India. India is the largest producer and consumer of dairy products and currently contributes 20% of the global production. Urban share in FMCG sector revenue is 55% and that of rural is 45%, and we learned that Britannia is expanding its business even in the rural sector also. Businesses have started focusing on the e-commerce to increase the reach to the consumers. Per capita consumption of biscuit in India is low at 2 kg compared to 10 kg in developed countries, which provides a huge potential for companies like Britannia to grow. Tough competition in the industry does not allow the business to pass on the rise of price of raw materials to the consumers. The businesses in the industry have been affected by the rise in the raw materials. So this is a disadvantage for the Britannia's company. A tough competition and the rise in the raw materials are creating some impact in the net profit or the profit after tax. Now let us come to the governance part of the Britannia's company. The promoters hold 50.57% stake in the company, which means the promoters, the initial shareholders of the company, are having 50.57% stake. If there is some fluctuation in the promoters holding, then there is something wrong with the company, which means the promoters, the initial shareholders, will not be willing to sell their shares if the company is doing really good. The total institutional holdings, that is FII and the DII. FII stands for the foreign institutional investors and DII stands for domestic institutional investors, are having a holdings of 27.50%. No major litigations against the promoters in the past. So there is no criminal or even say any civil case against the promoters or any major litigations against the promoters in the past. Now let us analyze the share price of the Britannia company. We are having a chart in front of us that is from Jan 2006 to Jan 2020, the share price of the Britannia company. In 1st Jan 2006, the Britannia share price was rupees 69 rupees. So one share price of Britannia cost you around 69 rupees. 23rd May 2008, 74. October 2nd, 2013, 464. 7th August 2015, 1061 rupees, and 31st August 2018, 3368 rupees, and the current share price, that is 25th May 2021, it is 3439.50 for one share of Britannia. So there is a steady increase in the share price of the Britannia company. Should always have this. There is a steady increase in the share price, which means the company is doing really good. Now let us analyze the PE graph or the price to earnings graph. As you know, PE is current share price or the current market price divided by EPS. EPS stands for earnings per share. Earnings per share is given by a simple formula, PAT, or the net profit, the profit which remains after subtracting all the expenses of the company divided by number of shares will give you EPS. So EPS PE will give you an analyzation of whether the company is overvalued, undervalued, or fairly valued. In the year 9 September 2010, the PE of Britannia was 94.3, EPS was 2.56, but now 3rd August it was PE 7.6 and EPS was 41.2. 14th May 2021, the PE is 45.2, which is the median PE of Britannia Industries. Now, the company is not neither highly valued or undervalued, or then it is fairly valued. Now, let us analyze the profit and loss statement of the company. We are coming to the financial part, the quantitative analysis of the Britannia company. We are having the net sales of the Britannia company in the year 2016, 7,731 crores, but now it is 2020 March, then it is having a net sales of 10,986 crores. So you can see that the company is having a upward trend in the net sales. And so is the operating profit. Operating profit is also known as EBITDA. EBITDA stands for earnings before interest, tax, depreciation, and amortization. I've explained in detail in the earlier videos. Even the operating profit is also increasing because of the net sales. The other income, the depreciation, as you know, depreciation tells us a very important aspect. If the depreciation of a company is having a positive upward trend, then the company is buying more and more tangible goods. Tangible goods stands for physical goods. So if it is buying more and more physical goods, that may be the factories, that may be the machines, the buildings, then the company is expanding its business. Even the profit before tax, that is the PBT, is increasing 1,149 crores in the year 2016, and now it is 1,908 crores. And net profit, that is the PAT. PAT stands for profit after tax. It is also increasing. In the year March 2016, it was 763 crores, but now in the year 2020, it is 1,484. Now let us see the compounded sales growth of the company in 10 years. The company was compounding, the sales of the company were compounding at the rate of 11%. In 5 years, 9%. In 3 years, 10%. Now let us see the compounded profit growth. 10 years, 30%. Your profit of the company is getting compounded at the rate of 30% in 10 years. The stock price CAGR is getting compounded at the rate of 33%, and the return on equity is 39% in 10 years. As you know, CAGR is compounded annualized growth rate, and return on equity is PAT divided by equity into 100. Now let us calculate the returns for the lump sum investments. If you are invested 50,000 in the Britannia company for 25 years and the expected return is 33%, this is a one-time investment. So the time period is 25 years. Then let us calculate the return. So if you invest 50,000, 25 years, CAGR is 33%, and the expected return or the expected amount is more than 6 crores. So you invested just 50,000, invested amount 50,000, and the expected return is 6 crores. So this is the magic of the compounding of money, because your stock price CAGR is getting compounded at the rate of 33%. So this was all about the fundamental analysis of the Britannia stock. Thank you for watching this video. Kindly like, share and subscribe our channel, and please click the bell icon for further updates.